Hello everybody and welcome by another episode of the Investing Show. Today we're talking about investing on a margin, and we will also explain what a margin call exactly is. So when you invest on a margin, you borrow money from a broker so that you can open a bigger position with the same amount of money. This allows you to potentially make a bigger profit, but if you don't watch out, you might blow up your entire account. When you trade on a margin, there are two types of margin that matter: the initial margin and the maintenance margin. So, what is the initial margin? The initial margin indicates which amount of money needs to be present in your investing account to open a position. If the initial margin is 50%, it means you have to invest 50% of the total purchasing value of that stock. So imagine you want to buy a stock for $1,000, and the initial margin of 50% means that you have to put in $500 yourself. In this case, the broker would put in $500, so you basically borrow that amount from your broker. After you open the position, the initial margin is not important anymore. The maintenance margin, however, is. The maintenance margin indicates the percentage that has to be present on your account at all time to keep the investment open. Remember the previous example where we bought a share of $1,000 with only $500? So let's imagine the maintenance margin in this case is 10%. This means that on the stock you bought for $1,000, there needs to be at least $100 in your account. Since you are trading with a margin, you actually borrow part of your investment. This means, in this case, with a level of 50%, that a 10% decrease in the stock price means that $100 is deducted from your balance in your account. Therefore, when 40% of the stock price goes down, then you reach the so-called maintenance level of 10% already. When this happens, the broker will not be happy, so you have to be very careful and vigilant to make sure you do not break your maintenance level. Oh, sorry, I have to take that. Yes, hello? What? My broker just called me and apparently I have a margin call again, which means that my investment got too close to the maintenance level. The broker doesn't want to run a loss, so they gave me two options. I can either deposit more money or they will close the investment position for me. In the latter case, I lose 80% of my investment, since the maintenance level in this example is 10% and I invested 50%. When you trade on a margin, you always have to be vigilant for that margin call, because you know when they call you, you're screwed. You can really lose a lot of money because you lose your position and you lose your money. When you actually buy a stock in the traditional way, this cannot happen because you just own the stock. Well, why do people then use this margin? It's just very alluring to make these big profits, right? If it is possible. One thing, however, you should keep into mind as well are the potential costs of using a margin. Because when you use a margin, you actually pay money for this. You have to remember the broker actually lends you money, and this is of course not free. They want to earn something from that too. So the broker in general charges an interest over this amount. This means that when you trade with a margin, your profit needs to be even higher for it to make sense to actually apply it. Therefore, always take a look at the actual fees you're paying for financing your position. Do you want to know more about trading on a margin? In that case, our video about leverage might be interesting, since here we really go in depth about how it works when you apply this type of margin or leverage trading. Also in the description you can find a link to immediately open a demo account so you can practice trading with a margin yourself. And remember, did you like this video? Thumbs up! And if you really want to hear more of this information or get some more phone calls from me this time maybe, then press the subscribe. Ciao ciao!
We hope you found this little video very nice. It should not be taken as investment advice. Remember that investing always carries some risks. Don't invest with money that if lost would be missed. video might contain affiliate links.